Imagine checking your portfolio and seeing a massive $1.5 trillion rally.
Yeah, just out of nowhere.
Right. And all because a fragile piece of paper was signed in the Middle East. But, while Wall Street is popping champagne over this geopolitical ceasefire, your local utility company is quietly warning that they might have to start burning more fossil fuels.
Just to keep your new artificial intelligence apps running, which is wild.
Exactly. So welcome to today's deep dive. Our mission today is to take a massive mountain of seemingly disconnected information. We are talking international peace treaties, the hidden physical costs of the AI boom, and some crazy corporate scrambles, and just put this giant puzzle together for you.
It is quite the stack of sources today, but we aren't just going to read you a list of news ticker headlines.
No, definitely not. We want to show you exactly how all these colliding forces are actively reshaping your wallet, your investments, and, your daily life right now.
Right. My goal here is to dig into the underlying mechanisms. I want to look at not just what is happening out there, but the actual mechanics of why it's happening. Because understanding how a ripple in a global shipping lane mathematically dictates the price of your plane ticket.
Or how a single line of code threatens a billion-dollar software monopoly.
Exactly. Understanding those connections is the only way to actually navigate this landscape.
Okay, let's unpack this.
Right.
I want to start with the loudest noise in the room right now, which is the geopolitical shockwaves. We have this fragile U.S.-Iran ceasefire making headlines.
And the immediate reaction from the markets was surprisingly positive.
Yeah, U.S. equities actually rose. The S&P 500 gained some ground. The Dow turned positive for the year. And we saw this massive $1.5 trillion rally. Analysts are calling it the taco trade.
The taco trade. It's basically a huge programmatic bet on historical patterns. Investors are betting on a familiar cycle where brinkmanship is followed by de-escalation.
Right, so they rushed back into tech-heavy funds like the QQQ, just pushing them straight up.
Exactly. It looks like a classic relief rally on the surface. The market is assuming that the absolute worst-case scenario is officially off the table.
But here's what I struggle with, and why I think this taco trade might be dangerously optimistic. It feels like the market is hitting the pause button on a really chaotic video game.
Oh, I like that analogy.
You hit pause, and you expect everything on the screen to instantly freeze and return to normal. But in the real world, the physical plumbing of the global economy doesn't just instantly unclog because a piece of paper was signed.
No, it takes months to sort out oil logistics and massive shipping routes.
Exactly. And we have the International Monetary Fund out here warning that the economic scars from this conflict could permanently damage global growth, which is a massive headwind for broad market proxies like SPY.
What's fascinating here is the sheer disconnect between financial market optimism and physical reality. You nailed it with the plumbing analogy. Look at the energy markets right now.
Crude oil has been bouncing all over the place, right?
Yeah, it has been flirting with and rebounding back past the $100 a barrel mark. And that is because physical traders are looking at key checkpoints like the Strait of Hormuz and saying, well, a ceasefire is great in theory.
But the actual physical traffic there is still an absolute mess.
Right. The physical uncertainty is still completely priced in. Now, for energy giants like ExxonMobil and Chevron, you'd think this is pure profit. Energy stocks are up roughly 25% for the year as a tailwind of these high prices.
But even their gains are capped by the sheer chaos of trying to operate in that environment, right?
Right.
Because they have to deal with actual ships.
Yes, volatility, shut-ins where they have to pause production, and all the expensive financial hedges they buy to protect against price drops.
And here's how that translates directly to you listening right now. If you're waiting for relief at the gas pump, you really need to understand this mechanical lag.
Right. The price of raw crude oil today doesn't immediately dictate what you pay at the station tomorrow. Refineries face a lagged pass-through as they process the oil.
Analysts are projecting it could take weeks just for the U.S. national average to slip back below $4 a gallon, and probably months for it to get anywhere near $3.
And that assumes the damaged infrastructure recovers perfectly without any hiccups, which is a big assumption. And that lag is bleeding into everything, especially the airlines.
Oh yeah, American Airlines and United are hiking checked bag fees right now. And they are explicitly pointing to the higher cost of jet fuel.
But then you have Delta Airlines taking a totally different, almost brilliant approach. They are cutting their near-term growth capacity, but they have a secret weapon.
They own a massive oil refinery in Pennsylvania.
Yes. So while other airlines are just passing the cost to you through bag fees, Delta is leaning on its own refinery to physically hedge its fuel costs. It is giving them a projected $300 million boost.
which is letting them confidently guide their second quarter earnings per share to that $1 to $1.50 range.
Yeah.
It is wild how owning the physical infrastructure totally changes the game.
It is a massive competitive advantage. And if we pull back, this sticky inflation is the absolute primary hurdle for the Federal Reserve right now.
Because Freddie Mac reported mortgage rates edged down slightly to 6.37%, right? Because the ceasefire news briefly cooled off bond yields.
Right, and the Fed's internal minutes still point to a potential interest rate cut in 2026, but that is a massive condition. They can only cut rates if inflation actually cools down.
Which doesn't look like a sure thing at all when you see the core PCE rising 3.0% year over year, and that reading was taken before this latest energy spike even hit.
That is the crux of the issue. Sticky inflation complicates the Fed's path entirely.
Here's where it gets really interesting. We're talking about global energy strain and geopolitics choking our supply lines. But there is a massive internal energy squeeze happening at the exact same time.
Entirely of our own making in the tech sector.
Exactly. We have this bizarre paradox where the same Silicon Valley giants that have championed green energy for the last decade are now creating a technology so insanely power-hungry.
It is literally threatening to break the physical grid.
Yeah, surging artificial intelligence loads are pressuring utilities across the entire country. Developers like Alphabet are rapidly expanding their massive data centers, and it is completely complicating state clean energy goals.
You have Nevada's major utility, NV Energy, flat out warning that this demand could require more fossil fuel generation.
And this is despite all the fancy corporate clean power agreements these tech companies have signed. The irony is just staggering.
If we connect this to the bigger picture, we are watching the collision of limitless technological innovation with the very real hard limits of our physical infrastructure.
Right, we say the cloud, which sounds, light and invisible.
Yeah.
But it's actually massive concrete buildings filled with servers that need unbelievable amounts of electricity and water.
And the sheer volume of money being thrown at this is hard to wrap your head around. Amazon is out there defending an estimated $200 billion in capital expenditures for 2026.
$200 billion just on infrastructure.
Yeah, and they are citing a $15 billion AI run rate in AWS, plus incredibly strong chip demand. They want to own the AI infrastructure space.
Because the alternative is irrelevance, right? You have to pave the roads before you can sell the cars.
Exactly. And we are starting to see exactly how these companies plan to productize this massive, heavy AI capex. Meta, for example, just unveiled Muse Spark.
Oh, that multimodal AI model, right?
Yes. It is designed to power Meta AI across everything they own. Instagram, WhatsApp, Facebook, and even those Ray-Ban smart glasses.
But the ripple effects of this AI rollout are absolutely brutal for the rest of the software world. I was looking at enterprise software stocks like Cloudflare, and they are slumping right now.
The market is suddenly terrified that these managed AI agents are going to compress SaaS pricing and workflows across the entire industry.
Think about the mechanism of how software as a service actually makes money. They sell licenses based on human headcount.
Right. If an AI agent can autonomously handle the workflow of 10 humans, you suddenly do not need those 10 software licenses anymore.
And it is not just basic software. Palantir shares took a slide after Michael Burry publicly stated that Anthropic is basically eating Palantir's lunch.
It perfectly highlights the threat of plug-and-play AI models against those older, bespoke enterprise systems. Why pay millions for a custom setup when a flexible AI can do it?
It is a complete paradigm shift, and we are seeing it hit the cybersecurity space in a way that is a fascinating double-edged sword.
Yeah, speaking of Anthropic, they are actually holding back their powerful Mythos model due to misuse risks. It is just too dangerous in the wrong hands.
But they launched Project Glasswing, right, with partners like Microsoft and Palo Alto Network.
Exactly. They're using Mythos defensively to autonomously find and patch zero-day software flaws. The AI hunts through millions of lines of code to fix vulnerabilities before human hackers can exploit them.
So the AI is playing high-speed chess against itself. But let me push back on this whole tech narrative for a second.
Okay, go ahead.
If AI is supposed to be the ultimate tool for convenience, why is the public sentiment shifting so negatively? A recent Gallup and Walton survey showed growing Gen Z AI skepticism.
Yes, more Gen Z users report feeling anxious or angry about AI, even while their weekly usage remains over 50%.
Right. If they're the most digitally native generation in history, why are they the most anxious about it?
This raises an important question about the psychological difference between consuming technology and competing against it.
Oh, that is a great point. Millennials use software like social media or Excel as a tool,
Mm.
but AI agents actually threaten to compress human workflows.
Exactly. Gen Z is watching an AI do the entry-level work they need to start their careers. They use it to stay competitive, but they resent it because it could replace them.
It makes total sense. You use the tool so it doesn't replace you, but you're looking over your shoulder. It is no wonder OpenAI just acquired TBPN, that insider tech talk show.
Right. They are trying to integrate it into their communication strategy with Silicon Valley audiences to shape the narrative.
Because narrative control is crucial when your tech makes your primary user base that anxious.
Exactly.
So what does this all mean? We have geopolitical wars, sticky inflation, and AI anxiety. How are people reacting to all this chaos?
They are trying to hedge against it, and it is sparking a massive regulatory scramble in prediction markets and the crypto space.
It honestly feels like a dystopian casino to me. You have lawmakers currently urging the CFTC to probe Polymarket because of well-timed Iran war bets.
It is shining a huge spotlight on CME Group and event-based trading venues in general.
But where do we draw the line between legitimate financial hedging and morbid gambling on a war?
That is the legal dilemma regulators are wrestling with.
Yeah.
Authorities are struggling to categorize these instruments.
Because there's a huge difference between prediction markets and traditional sports books, right?
Exactly. DraftKings manages risk as the house. Polymarket just matches traders directly. The technology is actively outpacing the law.
Are the securities, commodities, unlicensed gambling, the regulators are playing catch-up, and you see that same scramble in crypto.
Right. Morgan Stanley just launched a Bitcoin ETF, and crypto prices actually rose with the ceasefire news.
Plus, there is that wild New York Times probe pointing to Adam Back as being Satoshi Nakamoto, which, he strongly denies.
The corporate side of crypto and tech is restructuring so fast. Look at XAI reorganizing under the SpaceX umbrella in a totally Tesla-style rebuild.
Yeah, focusing on Grok Voice and Imagine. And they have SpaceX execs stepping in right ahead of an expected IPO. The capital consolidation is wild.
And regulators are cracking down. The SEC just appointed David Woodcock to lead enforcement, which Coinbase is watching very closely.
At the same time, Treasury's FinCEN and OFAC drafted new stablecoin AML rules under the Genius Act.
Yes, to block illicit transactions. They are forcing digital dollars to build in traditional banking controls.
All right, let's bring this all home. Let's look at how these massive macro forces ultimately land on your doorstep. Let's look at the mail.
The logistics strain is very real.
The USPS is proposing a stamp price hike to 82 cents, plus an 8% package surcharge. They're even pausing FERS pension payments to conserve cash.
Which is a huge headwind for companies like Pitney Bowes.
Yeah.
Legacy infrastructure is just struggling.
But here's the juxtaposition for you. While you pay more to mail a letter, Amazon is expanding its reach by shipping Eli Lilly's newly approved oral GLP-1 Foundayo
via Amazon Pharmacy for same-day delivery. It is an incredible pivot.
You can get cutting-edge, genetically targeted weight loss pills delivered to your door the same day.
And that genetic targeting is key. A Nature study just linked GLP-1R and GIPR variants to weight loss and side effect differences on semaglutide and tirzepatide.
Meaning they can use precision medicine to know how your body will react before you even take it.
Exactly. But not every company has a breakthrough drug. Legacy companies are being forced to either aggressively pivot or defensively consolidate just to survive.
Like Kia targeting the U.S. truck market with a hybrid midsize pickup by 2030. They have to adapt.
Or Disney planning 1,000 marketing layoffs under CEO Josh D'Amaro to cut costs.
Paramount is detailing Jeff Shell's exit terms right now. They're just relying on David Ellison's bench ahead of the WBD deal.
We see consolidation in spirits, too. Constellation Brands slipped on lowered full-year adjusted EPS guidance.
Which leads to M&A chatter like Brown-Forman being approached by Sazerac. They have to merge to survive current economic cross-currents.
And consumer brand sensitivity is at an all-time high.
Oh, definitely. Look at Phil's Coffee. They drew social media backlash for removing Pride and other flags from their stores.
And looking at just the facts of the policy change and the resulting criticism, it serves as a massive reminder for peers like Starbucks.
Right. We aren't taking sides on the policy, but purely as a business reality. You cannot afford a single misstep right now.
Everything is magnified.
We have covered a massive amount of ground today. We started with a fragile ceasefire giving us the taco trade and dictating oil logistics.
Then we moved into AI's massive infrastructure demands, ironically forcing utilities back to fossil fuels.
We saw corporate restructuring, crypto crackdowns, and legacy companies scrambling to adapt, It is all part of the same economic ecosystem.
It really is all connected.
But I want to leave you with one final lingering question to chew on. We talked about AI autonomously finding its own software flaws and driving up global physical energy demand.
Right.
At what point does AI transition from being just a tool we use to manage logistics into an independent economic actor that actually dictates global energy and hardware markets?
That is a terrifying and fascinating thought. When does the grid start serving the servers?
Thank you so much for joining us on this deep dive. Keep questioning the information around you, look for the hidden mechanisms, and we will catch you next time.